Welcome, everyone. Good morning, good afternoon, good evening, wherever and whenever you are tuning in to listen to us. It's great to have you here. I'm Drew Wandzilak. I'm a principal here at Alumni Ventures, where I lead our critical and strategic technology efforts. So many of the topics that we're going to talk through today, we have a great panel lined up to talk through this theme of Main Street access to defense tech investing. And we'll touch, Mike, who you also see on the screen, we'll touch into why this matters. But the high level here is we're at this critical point in terms of defense and dual use tech, national security innovation. And we started diving into this concept of, one, how do we get more Main Street access to these critical technologies? And then also, what do these critical technologies mean for Main Street? So let's dive in. And before we get started, just a quick little disclosure here. This presentation is for informational purposes only. It is not an offer to buy or sell securities. If you want to learn more about our disclosures, you can click that link or search that link down at the bottom, av-funds.com/disclosures. A little bit about us. So I mentioned I'm representing Alumni Ventures. We were founded about a decade ago, really with this North Star, providing access to individual investors like yourself, access to the asset class that is venture capital. We've raised over 1.4 billion from over 11,000 individual investors. We're about 120 people across multiple offices in the US. And these have always been themes that have been incredibly important and critical to us as a firm. And so a little bit more on that, we'll jump to the next slide. We established about 18 months ago the US Strategic Technology Fund. It is a fund built on the Alumni Ventures platform, so built for individual investors to access these dual use defense, national security and critical technology venture-backed companies. We deploy about 15 to 20 companies in each of these portfolios, diversified across sectors, stages, and geographies, relatively low minimums compared to what you might see in the venture landscape, and built to be accessible for individual investors like yourself. I'm going to pass it off over here to Mike, who's also on the call today from Silicon Valley Defense Group, to share a little bit of background on the organization and kind of what brought us here together.
Yeah, thanks, Drew. I'm really excited to be here. Big thanks to you and the Alumni Ventures team, not just for your partnership, but frankly for being a leader in this space and for lending your voice and resources to this nationally, in my opinion, mission critical topic. And what is that topic? Broadly, it's defense technology investment and innovation development. SVDG is really grateful for this partnership, so excited for this conversation. Hi, everyone. I'm Mike Keating. As Drew said, I'm the executive director of the Silicon Valley Defense Group. SVDG is a 501c3 nonprofit that focuses on convening founders, funders, and public servants to collectively surface and identify and address systemic barriers to defense technology innovation. It's a mouthful. I've spent the duration of my career around emerging defense technology dating back to my time on active duty. And I took this job for one reason, and it's the unique mission focus of this organization. If we step back, what we're watching today globally is a revolution in military affairs across the globe. And while our country continues to set the bar for global innovation, we frankly often fail and stop short at adopting innovation at speed and scale inside our Defense Department. So at its core today, this conversation revolves around enabling Main Street access to the growing defense tech ecosystem. I think this fascinates, my team and I, not just for the opportunities of returns to investors, but for the larger idea of a broadened and shared inclusion of public and Main Street access to a critical national strategic imperative, which is innovation adoption and the creation of technology-enabled deterrence in our Defense Department. Put short, there's a fun patriotic element to this conversation, and I'm excited to have it today. One of SVDG's focuses is a yearly publication called the NAEC 100. This is a ranking, it's our ranking of the top 100 venture capital or privately owned defense tech startups. These companies must be privately held, they must be US based, be US owned, and be operating codified defense business practices. I encourage anyone that's interested in this to check out natsec100.org and download this year's report. America loves a scoreboard, and for that reason, people are drawn to the rankings on this publication. But the really interesting part of the report is our analysis, SVDG's analysis of those top 100 companies themselves, and what lessons and observations it yields for the state of the defense tech innovation ecosystem. Our report this year came out in July, and it told some pretty interesting stories. Fundamentally, it prompted why we're convening today and why Drew and I are growing this partnership between our organizations. So a few takeaways from this year's report to set the stage. If you analyze the top 100 companies on this list, it tells a story of positive but precarious momentum in this ecosystem. It shows a story of a healthy ecosystem. There are companies rising and falling on this list. Indeed, there are companies on last year's list that have IPO'd since, enabling access to Main Street investors and showing that this is a healthy ecosystem and that companies are growing. We saw a massive increase in physical footprint of where the top 100 companies have their offices. It's in most states around the country today, and they employ 70,000 plus employees, which is creating a clear impact on local and municipal economies via job creation, via upskilling, et cetera. We also saw a 2.3x increase in Defense Department spend on these companies, although a gap does still exist between private investment and government revenue. A 2.3x increase is nothing to scoff at. And indeed, we expect, given current events, to see even more of that next year. The biggest signal in this year's report, if you look at it as a whole and you analyze the companies on it, the defense tech ecosystem is ready for its next natural phase of evolution. It's ready to transition from early stage technology development and incubation to innovation adoption at scale. How do you do that? You necessarily have to start engaging different pools of capital. You have to start engaging not only Wall Street, but Main Street. And indeed, there's going to be huge mutual benefit to anyone that's involved. Yes, there's going to be returns, right? But if you're a founder or you're an investor that was around since the beginning, this next extra stage of evolution is going to be hugely advantageous. It was also going to enable these companies to scale their technologies and to field them for the Defense Department. So the good news is, like I said, the companies on our list are ready. There are clear signs throughout. I encourage people to download it. Excited for this conversation today. So thanks, Drew.
Yeah, absolutely. And I just want to double down on something that Mike said, because I think this is the goal, to his point, of why we came together on these things, because there is a financial opportunity here. There is a patriotic element to what we're doing. But, our goal for today is you step away from this conversation, understand kind of all of the layers and areas that these technologies impact everyday Americans. There's a sense of duty in keeping our warfighters safe, but there's also building more resilient supply chains that impact, the cost of things at the grocery store. It's jobs and opportunities that happen, as Mike mentioned, building up capabilities, headquarters across the U.S., not just at the coast. And so opportunities for, communities kind of in the heartland or in other areas that maybe, weren't exposed to technology before, that are now happening with this rise of defense and dual use innovation that we're seeing in the market. I just wanted to highlight, at Alumni Ventures, we've leaned in here. I mentioned this has been kind of core to our thesis for many years, almost since our inception. We're proud that 11 of our portfolio companies were on the NASDAQ 100 list this year. We've been a top 10 most active venture investor on the list for the past 2 years. And just to give you a sense of kind of the types of companies that we talk about when we say defense and dual use, it's things like Impulse Space, right? That's building in-space maneuverability, founded by, employee number one at SpaceX. It's TRM, which is, kind of a financial and blockchain intelligence platform. They're the good guys fighting some of the cyber and blockchain crime, to things, all the way to Radiant, that are building, micro nuclear reactors for not just military installations and remote communities, but also for disaster relief and to power data centers and this AI renaissance. So all kind of walks of life, touches, the economy and people in many different ways, and just proud to be recognized and grateful for the work that Mike and his team do at SVDG. So now I actually want to invite our panelists on. We have a great crew here today. And we're going to ask them to introduce themselves kind of as they answer a question, just in the efficiency of time here. And just to set the stage, I'm actually going to throw this first question over to Emily. What does this topic of Main Street access to defense tech mean to you? And then what changes have you kind of seen in the last few years, the last decade or so, in the meaning behind that, and just in the industry overall?
Sure. So, hey everyone, Emily McMahon. I'm a general partner and co-founder of AIN Ventures. We're a pre-seed and seed stage focused fund that invests at the intersection of deep technology and dual use. And so very relevant to the theme today. Separately, we also have an investor syndicate of graduates from the 5 publicly funded service academies. So we're just shy of 600 service academy graduates on our platform, and we invest in a number of early stage companies as well. And so I think with both of those hats on today, I kind of represent both the fund perspective and also the individual investor. And so I'm actually excited to be bringing not only my own career experience. Coming from the military, I served in the Army for a number of years, and then I was fortunate enough to be an early employee at a government contractor. So I've sort of lived through some of these evolutions, and I'm really excited to continue not only service, but also see this evolution, especially with respect to technologies. And then second, with respect to that, just really excited to also, almost similar to Main Street investors, bring a population that often hasn't had a seat at what I would call the early stage investing table, which is often folks who have served, who have STEM backgrounds, who understand the government procurement cycle. So that's really exciting. And I think I'm really excited and just sort of seeing the evolution in the last 10 years specifically. There's just been such an emergence and support, I think, around a lot of these technologies and a lot of misnomers that have sort of been disproven as more and more folks come to the table. I think some of the things that you've seen are the emergence of some of the early stage incubators and programs associated with DIU and AFWorks and things that are sort of mainstream now. You also see just the rise. We often talk a lot about dual use technologies, things that have both government and commercial application, and really this sort of education as well of like all the opportunities that a lot of this early stage government innovation provides, and just sort of the basics. I mean, many of us know of the GPS and internet and some of the early stage technologies that have paved the way. And so I think it's just really interesting to see this more and more venture capital flowing into early stage startups, and really software being just as critical a component as hardware has traditionally been. So that's sort of some of the evolution that I've seen, not only in my own career, both as a service member, but also as an early stage founder and operator, and now as a VC. So thanks.
Yeah, a very quick follow-up for you, Emily, just because I think the experience that you have at AIN and the types of investors that you work with and individuals, what benefits have you seen by seeing servicemen and women participate in this kind of innovation ecosystem in the way that you guys are channeling it? And like, why is that important? And then maybe how does that extend to just broader Main Street of, not why should they care, but why is it important?
Yeah, I think it's super, super important to be able to connect folks who have served to the investing space. So that's actually not traditionally something that most folks associate service members with as investors. And so we're also trying to educate and sort of bring the experience, the observations, and really the lived experience, which I think is super, super crucial as we're kind of forging these communities. Oftentimes, folks who've actually served can really share their experiences and ultimately what will work and won't work, and what won't work in terms of like that boots on the ground perspective. Mike and I have both served overseas and can tell a lot of stories about things that ultimately just just never made it out of a Connex, or never made it onto the battlefield, for instance. And so I think ultimately having that lived experience to say, yes, this is actually effective, and then really what can scale and ultimately what we're trying to look for. So yeah.
Great, and I'll flip Jamie to you, maybe a slightly different perspective on kind of that same first question of when we talk about Main Street access to defense tech, kind of changes in the ecosystem that you've seen. How does that hit you? Kind of what's your response and perspective here?
Sure. So I'm Jamie McGurk. I'm a general partner at BAM Elevate. We are the lead stage private investing team at Balyasny Asset Management, which is a large global multi-strategy hedge fund. That will be important. I go through this answer, which is the evolution of capital markets in different sectors. And so, I've been in private investing for the last, 15 or 20 years. And I've seen the evolution in different sectors. So I just describe where defense tech is on a continuum that is different really from a lot of a lot of different investing areas. I was, an early partner at Injury Sports, and one of the things that we used to worry about is like, okay, what's the downstream ecosystem that is going to develop, because it hadn't yet in a lot of things that we take for granted now. And so now is no different in defense tech than it's been in technology broadly. And I say that with confidence because it is starting to happen. So, defense tech in particular has gone from, okay, it's more like a bespoke investment network. There was a time, and it wasn't that long ago, where LPs would call up funds that invested in things like, Anduril, and said, hey, like, what are you doing? This is kind of outside of your mandate. And so it was not a regular way of Silicon Valley investment. And, this is, by the way, only about 10 years ago. And now you can see, and I think I don't think there would be any disagreement, that there is a lot of Silicon Valley interest in defense tech investing. And I use Silicon Valley not as a location, but as kind of an ecosystem of a type of investor that would invest in a certain sector of technology. What we've seen in other sectors is, and this continues, that's like, okay, then growth investors, which is where I sit. And so when I give my introduction, I said, this is kind of an important thing. Like, you wouldn't see an investor, like a BAM, like a Fidelity, like a traditional, more crossover later stage investor interested in a space, 5 or 10 years ago. And the reason for that is, like, we think about, and every investor thinks about, just like I gave the example of Indreessen, thinking about, like, okay, who's the downstream investor at that time being the Series B, Series C investor. Now we think of the downstream investor as like, okay, the public markets, like, okay, can a company like this, can it go public? And I think that has largely been answered too. I mean, we've only seen a small number of them, and everyone's anticipating like the big bang of like a SpaceX or an Anduril, going out to public markets. But we've seen several deals that would fit into the defense category to do that. And so when I think about Main Street access, I think about that being part of that evolution, and obviously the broad-based Main Street access being in public markets. I think we're seeing that start to happen. And I think there's other avenues, and when you describe alumni, that is an avenue today. This isn't off to buy or sell securities, of course, but there are smaller avenues today, but that's really the broader avenues. So that's kind of one thing I see. The other thing I'll see just quickly is, if you look at like the NASDAQ 100 this year, you'll see companies at or near the top of that list wouldn't have associated with defense tech, and I'm thinking of specifically Databricks is near the top of the list, and you wouldn't have thought of that. And the point there is that companies that are in more of traditional technology spaces, the government needs that too. The DoD needs that too. So these are technologies that are consumed by, it's not one buyer, it's, as people on the call know, many buyers, hundreds of buyers that sit in that group. And so I think that is access as well to defense tech and dual use. And so I think it's becoming a lot more broad-based in the definition, and I think that's only going to continue.
Yeah, it's interesting insight. Alumni Ventures, we're an investor in the Aura Ring, which is your sleep tracker, and I've gotten questions from dual use defense tech founders of is that in your critical technology portfolio? Because I think starting to build out some of their defense exposure. Really natural segue, I thought, Jamie, on kind of the capital stack, the opportunities, a little bit more into the public markets. To Eric, actually. For your introduction and kind of your perspective on maybe some of the things that Jamie mentioned and some of the shifts, in the past few years in terms of the defense tech ecosystem.
Yeah, definitely. So background of me, I'm a vice president at the investment bank Evercore, or sit in the equity capital markets division, helping clients raise equity capital via IPOs, follow-ons, and private placements. And so when you think about my role versus Jamie and Emily, I think we all sit in a very different place in a company's history, right? I'm typically dealing with companies that are going public or the later stage. Jamie's somewhere in between, and Emily likely the earliest stage. And so what does it mean for me? So my perspective is going to be much more about public style companies, right? when I think about going back 10 years, and maybe I'll even take it back even further because there's been such limited amount of defense tech opportunities for public investors. Let's take it back 25 years. Kratos IPO'd back in 1999. Air Environment IPO'd back in 2007, and Palantir direct listed in 2020. And those are the main defense tech companies I would think of outside of the IPOs this year for anyone to be able to invest on a public stock, right? However, over the last 12 months, we've seen 3 defense IPOs over $100 million for public investors to actually be able to invest in. So Karman Space and Defense, a tier 1 supplier for the missile supply chain. Voyager Space, a space technology company that's also building a commercial space station. And then Firefly Aerospace, a launch business who's a competitor to SpaceX, right? And all 3 of them have raised over $2 billion in their IPOs over the last 12 months. So 3 opportunities for investors over the last 25 years taking out this year, and then 3 all in just this year. So I think that's really interesting as you set the stage. But to your real question on what does that mean for Main Street investors, I think of it 2 ways, right? I think of it, one, your ability to invest in already public companies. And so we've gone through a few of those who you can invest in today, and it's only a handful of companies. And so that means you don't have a great option of being able to invest. However, the second way for, I'll call retail investors or Main Street investors to invest is actually at IPOs as well. So I'll touch on this for a second because I think it's important and something that's really shifted over the past 5 years. Robinhood began to democratize this process to the masses back in 2021 with the IPO of the healthcare apparel business FIGS, where they gave retail investors the actual opportunity to invest in IPOs. IPOs have historically been only available to institutional investors, and so that entire first day pop, where IPOs typically increase in value on that first day, was all given to institutional investors. And so SoFi followed this trend of allowing retail investors shortly after. Large brokerages such as Fidelity and Schwab followed thereafter. And so that's the second piece of ability for Main Street investors to actually invest in. When we start to see more defense tech businesses actually IPO, platforms like Robinhood and SoFi and Fidelity are actually giving investors the opportunity to invest there at that stage. So I think we're really optimistic on what we're likely going to be seeing in the future, and we can touch on this in a bit. But as more companies become public companies, more defense tech companies become public companies, they'll have more abilities for the Main Street investors to invest.
And maybe we'll keep this on you, Eric, or it can even be a jump ball here if people have thoughts. But because it's building off of something a little bit that Jamie touched on is, this forward looking, how is the stack going to develop, right? How are these opportunities going to change? Asking everyone to put a little bit of their opinion hats on kind of like, what does this next evolution of growth look like? Or, slightly asked a little bit differently, like what needs to happen to kind of get to this next evolution? Things have been changing, things have been moving. Eric, you laid out really, I think, a great timeline in terms of where we were and where we are today. What does that kind of next step look like? And Eric, maybe to you, but feel free anyone to jump in on this one.
Yeah, I think we have the positivity around this sector. We have investors' interest in this sector. And so from my aspect, for companies that are moving into the public markets, right, we just need to see that continued progression of maturity for investors that want to invest in the public markets, right? An investor that's looking to invest in your fund, Drew, or with Emily is a very different type of investor that's investing in the public markets because they have different risk profiles. And so the maturity of the business needs to be further along for them to become public. And we're starting to get to that stage where all of the businesses on Mike's 100 list, they're all moving towards that maturity profile that have the ability to then IPO in the future. So what does that mean? I think we see this really opening up over the next 24 months to more companies with the ability to IPO. And if I were to put my just hat on to say, what do I think happens over the next 2 years? Well, through 2026, I think we see more general, mature, profitable aerospace and defense businesses IPO. I think 2 to 3 mature businesses probably IPO. When I say mature, probably over 100 million of EBITDA, and these are probably private equity-backed firms. Over that same time frame, I think there's probably another 1 to 2 VC-backed names, more likely the ones on Mike's list, right, that have between 100 to 300 million of revenue. And then post 2006, I think we really see that acceleration of more VC-backed names as they become more mature to IPO and become public companies.
I'll jump in here. I think at a large scale, I think when you look back kind of at the heyday of like Iraq and Afghanistan and kind of where we are today, I think we have a couple of different powers at play. One, I think there's a lot of I will just call them like geopolitical drivers. And so I don't think that those are going to go away. I think those are only going to become more front and center. So I feel like, this continued response to however you want to define it, this geopolitical instability, I think is going to make a lot of these things just front and center for everyone. I think there'll continue to be the evolution of organizations like the Silicon Valley Defense Group that are highlighting and educating and bringing together the venture community, the startup community, the government community, and really around the country and internationally even, which traditionally hasn't been a conversation that's kind of gone outside of the Washington, D.C. area. And so I think you're going to continue to see some of these bigger powers that be. And I think that that's really going to have an impact. I think you're also going to see, I think there's been sort of this assumption that a lot of this industry is just around the traditional primes, the Lockheeds, the Boeings that are sort of household names. And I think you're going to continue to see this access and this exposure to more folks and more investors becoming comfortable recognizing that there's a lot of technologies that touch on the DoD budget outside of just weapon systems. And especially as, autonomous systems and AI, and you just mentioned human performance, these are all buckets that are really relevant to the entire government and not just defense. And so I think those are going to be really interesting. And then the last piece that I think is really exciting, not only from like the Main Street investor approach, but one of the things that is so almost like surprising to me is the talent and the folks that are interested in working for these startups. So I'm at the early stages of this. And so one of the things that's really interesting is to see a number of founders who have no government experience, but are coming from some of these more traditional larger tech companies that are now interested and see the government as an opportunity. That's a huge shift that I think really, just in the last 5 years, there's just more and more comfort and excitement around working for an early stage company. And I think that that's only going to continue to be more with reports like the NASDAQ 100 and other activities, both public, private. They'll continue to highlight the opportunities for folks to support this bigger ecosystem.
And one thing I just add on to that too is we talked about the maturity of the ecosystem. And, I described the maturity of like the capital continuum, but I think equally important, and it's unique to this segment of the market, is maturity also speaks to the buyer's ability to pay and engage, and you can actually sell to the government. I think that has changed just as radically over the course of, maybe I shouldn't use the word radical. It's because it still has some maturity to go, but it has come a long way. And I think it's in large part to groups like DIU and others that are on the buyer side that help bring these technologies in. SVDG, of course, that helped to make those kinds of connections. That has had a sea change in that, to Emily's point, now founders are excited to build in these spaces because they can see a path towards selling, to the government, and on the government side, they're not just buying from the primes; they're buying from early stage startups, and that's been a surprise to me. Is as early as your day startups where, that has started to happen. That's pretty exciting for the development of this system.
Yeah, I appreciate that comment, Jamie, in a big way. I think who the customer here is half of the conversation, right? And implicit in the question is what needs to happen for this ecosystem to continue to flourish. And in my opinion, the biggest one is increased appetite for engagement with non-traditionals inside the Defense Department. I think that is already happening, but it has not happened enough, right? And I don't think anyone in the department in either administration would disagree with that, right? In any administration would disagree with that. But our procurement system revolves around how to do business with the primes who historically were building very siloed, hardware-centric acquisition vehicles, literally vehicles, right? Like this scale of iteration of technology development iteration cycles now manifest on the battlefield in Ukraine is a story of how the commercial software companies do things. And we don't have a procurement system that enables coordination or contract vehicles for those companies, right? Some data, like I said, we had a 2.3x increase in defense contracts to the companies on the top 100 this year. Great, it still constitutes basis points of the entire defense budget, right? I don't think anyone reasonably thinks that's enough. If these top 100 companies are a proxy for cutting edge innovation in this space, then they should see a larger share of the defense budget, right? I don't think that's a particularly crazy statement. The good news is that there is an appetite right now inside of government to change a lot of this, and we're seeing some really positive signs, right? There's pending legislation on the Hill, the Forged Act and the Speed Act. There are executive orders seeking to streamline procurement modernization. I think people get it in a way we didn't even 5 or 10 years ago. And indeed, I think you'll continue to see a government push to coordinate and contract with non-traditional vendors. Frankly, they have to.
I think some of this too is it's more of what's happening now. It's, to Emily's point, it's more talent going into these spaces. It's more capital flowing behind these companies. And, we're not talking necessarily about, consumer social media platforms, right? We're talking about truly, for the most part, pretty critical technologies. And so there's this case of like what needs to happen, but also like it needs to happen, right? Like these are all areas that, the alternatives are more slim when we think about, resilience and readiness. And there's an efficiency piece here, and how do we get that to the market faster? But it's so critical that I think it's, more energy, more excitement, more funding, more people. And I think we'll get there. Fantastic. And then, I think something we touched on a little bit earlier in the presentation, but we're obviously, engaging kind of Main Street access to these themes. I'll flip this one to you, Emily, and then I'll jump in as well. How can individual investors, find ways to, on the private side, get exposure, get access, get more engaged, be a part of this community of tech companies like those that are on the NASDAQ 100?
Yeah. So, I'm representing a lot of individual, I would say, Main Street investors through my community. We, for instance, host, I'm based in Arlington, Virginia, but we do a ton of events and activities around defense tech and really bigger, deep tech in general. So I would encourage folks, if wherever they are, to research different events and activities that might be in their backyard or their city around different areas, whether that's a startup week or something. There's usually some sort of defense tech track at a lot of different events that are around the country now. Some of them have specific focus, like space, for instance, or deep technology, depending on the city. So I would encourage folks to definitely research. There's a number of great Substacks. I've actually put out for our syndicate about a bi-weekly-ish publication of different activities around dual use venture, and try to also put out, Alumni Ventures, say no more, a lot of resources just around investing and sort of how to understand, depending on the stages, things like this. So I would really encourage, I think there's a lot more, especially too in the public-private space. I know, as we've mentioned, a number of organizations like the Defense Innovation Unit, as we keep saying, DIU, their mission as well is to get around the country and connect with different cities and founders and whatnot. So a lot of great resources around just sort of connecting and getting access to a lot of this momentum.
Great. Jamie, Eric, Mike, any additional comments on that, and kind of from your perspective, how you're seeing more individual retail access to these themes?
Yeah, I'll just say from the public perspective, right? Go, Jimmy.
I was going to say from this point, more we described that will market, but nonetheless, the whole and that started to proliferate into as private companies into like the Fidelities and the Franklin Tempests of the world, mutual funds that are decidedly retail and individual products. So there is getting to be a little bit more exposure from an investment standpoint. And then I would just say from a regular way standpoint outside of investing, I'll agree with Emily. I mean, those are around the country. I sit in Silicon Valley and Stanford, which I would never have guessed 5 or 10 years ago, having a defense tech conference has a defense tech conference. And so there's ample opportunity to engage directly with these companies on the NASDAQ 100, with other like-minded, both startup employees to go and work for some of these companies, or to engage with founders and so on. So that has proliferated way outside of DC, all through Silicon Valley, all through San Francisco.
I'll just quickly echo kind of what Jamie said and summarize before, right? We had kind of only 3-ish defense tech companies in the public markets before this year, and then 3 IPOs of defense tech businesses this year. So doubling of the businesses you can invest in on the public side with Karman, Voyager, and Firefly. And so the universe of investment opportunities on the public side has now doubled. And I hope in 2 to 3 years, we can say it's doubled once again. So.
And I'll give a shout out to Mike and SVDG, because I think so often it's like, yeah, what are like the tactical things that I can put my hands on? And SVDG's website, I would definitely suggest subscribing to their newsletter and checking out the different events. There's definitely, the great thing about SVDG is they're backed by a number of very large and small corporate sponsors. And so as part of that, you get access to a lot of different events and activities around the country. So like as Jamie mentioned, the Stanford conference is coming up this October. There's a number of things around the country that I think folks that are looking to just get confident and dabble in some of these things, that it's accessible and really open to folks to learn more, which I think is half the battle, is just feeling confident and comfortable in the space. And as Jamie mentioned, I think that's only going to get better, both from the institutional perspective, but also the individuals as they get comfortable with more of these terms that have often been a little limiting for folks just to get confidence around the space if they don't inherently come from the sector, which is really what we're trying to sort of evolve from.
Yeah, I love it. As we approach the last sort of 5 or 10 minutes here, I'll ask a final question. And before I do so, if you just zoom out and you look at where we were 10 years ago and where we are now, right? And this segues to the last question from Drew. SpaceX exists 10 years ago, right? That was a household name. The 100 companies on my list, for the most part, don't exist, right? And that list is 100 companies. It starts with 900 companies that we initially pared down with help from Jamie and his team. This is an enormous growth. This isn't going anywhere, right? The geopolitical requirements for this innovation ecosystem to flourish aren't going anywhere. In fact, they're getting stronger. And indeed, we're looking at a plus up of the defense budget this year, or in the next president's budget, of closing in on $1 trillion, right? So there's an opportunity here in a really big and growing way for retail investors, and I think it's exciting, right? And like we opened with, there's a patriotic component to this that, from a strategic investment standpoint, should be exciting to folks. As we reflect a little bit on that first question, what's happened in the last 10 years, if this crew, and we should reconvene in 12 months, but if we do in 12 or 36 months, question to the group here, what's happened in the ecosystem? In general, what's your prediction? Wave your magic wand where, what might happen, good or bad. And then the second follow-on I'd like to end with, is there a major misnomer or widely held assumption about this ecosystem and investment category that you think is BS? And I'm giving you a moment here to rectify.
Maybe I'll start on that one. So maybe I have to do both of them. I can't cherry pick. So on the prediction, I think the snowball keeps rolling. I think that the capital markets continue to develop. I think the buyer engagement continues to develop. It's come a long way, but it hasn't been a flip switch. It's developed over time, and so I think that continues. That will attract, in turn, more capital, more founders, and so on. And so I do see this as we're at a point on a natural continuum of development that I expect to continue. In terms of misnomer, I alluded to this before. The government is not one single buyer. The DoD is not one single buyer. There's a very fragmented customer base on the other side of those big kind of levels. And so there's lots of different pockets of opportunity, and one is not all, and only having the one, there's not other opportunities. So I think that's a big difference. This is a very large ecosystem with a number of customers, a large number of customers, not just one buyer that you can sell to.
I'm happy to go next. So I'll start with your second part of the question first, the misnomer. And the misnomer I see is small companies can't go public. I think that's certainly a misnomer that certain founders or some parts of the investment community believe, but the stats really say otherwise, right? So this year alone, companies with a market cap of $2 billion were 60% of the IPO market, less than $2 billion. And IPOs that had revenue under $200 million at the time of their IPO was 40% of the IPO market. And then the last thing I'd say is that 25th percentile IPO had just $100 million of revenue at the time of their IPO. Now, there's a lot of things to consider when IPOing a business, not just revenue, but things like backlog, margins, long-term margins, level of predictability, growth rates. All these things need to be thought about when you're IPOing, but revenue alone shouldn't make a company un-IPOable, for sure. Now, the defense businesses are more challenging from an aspect of predictability sometimes when you're not as diversified, right? Investors love to see quarterly meet and beat, especially around the date of the IPO. And when you have less predictability and less visibility into programmatic revenues, it can be a little bit harder to do that. So the IPO, especially now for all companies, isn't for everyone, but it's an avenue that many will take in the future. I think that gets me to my prediction, and I think I kind of almost said it earlier, but it's that many more of what are on Mike's list are going to be IPOing, right? We've already taken 2 off that list already just this year, and Mike now needs to backfill with some other ones, but there's going to be more that come off that list, and they're no longer private companies because they're IPOing. And so we're going to see an influx of these businesses IPO as they mature and as they appropriately scale, so that they can refresh the private capital for others.
I'll quickly piggyback off of Jamie and Eric's point and maybe step a little bit into Eric's world a little bit more is, I think there's going to be changing behavior of buyers, lowercase b and capital B. And this ties into, I think, Eric's point on potentially more IPOs, but also I think more M&A. Like there is this really interesting environment right now that Emily touched on, more talent, more capital kind of going into these markets. We're also coming out of a slower kind of IPO period. So there's like broader market things outside of these trends that are happening. And I think we're just seeing great technology and great talent go into these themes, and maybe not always perfectly calibrated in terms of, valuations they're raising at or capital that they're raising. But it's still great technology and it's still great technologists. And so I think there's potential for more IPOs. I think there's more potential for, M&A in a different way, right? Some of these primes and larger companies are interacting in different fashions. And then the second piece, I think, the misnomer that, and the reason I say critical tech a lot is because I think defense tech is actually a misnomer. We talk about, defense tech, I think, in an interesting way, but there's so many of these technologies. I mean, just go on the NASDAQ 100 and, Databricks, someone brought up as an example. They just don't feel like defense tech companies because you hear defense tech and you think, missile technology, right? It's weapons, it's tanks, whatever it is. And I think part of another way that we try to help, people that maybe aren't exposed to these markets is critical technology, right? The government is a big customer. They're very interested, but it's energy systems, right? It's supply chain resilience. It's, I argue that like clean drinking water is like critical technology, right? It is of the interest of the government, of the interest of communities, but it's not purely what you would think about, on a DoD budget. And so, yeah, defense tech, I think like broadening that, and maybe we own the term, and I think we're trying to, but yeah, that's kind of my thoughts on the two of those pieces, Mike. But Emily, I know you're about to say something.
I would just argue, and I know we're coming up on time, but just saying, I would love to just kind of debunk the misnomer is that this is just for the large defense contractors. I think to your point, Drew, there's a lot of opportunities for growth outside of even just traditional IPOs that we're seeing. A lot of these large primes also have corporate VC arms that are very active. There's a real explosion of private equity and like growth capital around a lot of this. There's a lot of things that we're seeing creatively in terms of growth across these companies. And then the other piece, I mean, you nailed it in terms of like, it's beyond just the traditional weapon systems that we think from sort of just like, what we've seen in the past and past wars. And so I think this is not only good for exposure, but it's also just good as like national security and being aware as a citizen what is actually happening currently and what is ultimately going to impact you both as a citizen, but also, having access to these bigger opportunities, because I think we're really at this critical point, especially with AI. So
I think that's an incredible place to wrap, because I know we're over time, and I think very well said to send people off. And it sounds like get engaged. We'll follow up to this, everyone that's been here with us today, with resources. There's a QR code on the screen from our end, and we collect a lot of the stuff that the panelists have talked about today. If you're interested, I think we're kind of all here, and there's plenty of ways to engage. And like I said, we'll follow up with some more materials. But thank you to everyone on the panel for being here and participating, and really thank you for participating in kind of this really important ecosystem that I think we're all working in our own ways and then collaboratively to build and support. And then thanks to everyone kind of in the audience for joining us today. Thanks again for being here, and I hope you enjoyed this conversation with Silicon Valley Defense Group on Main Street access to defense tech investing. I hope you came away from the conversation and the webinar more excited about the opportunities in critical technology, whether that's in aerospace, cybersecurity, AI, advanced energy. We are looking across these critical domains. And I hope you understood the importance, not just for access for Main Street investors, but also the opportunities and impact of defense and dual use and critical technologies on those same Main Street individuals. As a reminder, the U.S. Strategic Tech Fund with Alumni Ventures is that opportunity for investors to access these critical technologies. If you want to learn more about the fund and get to the next steps on how to invest, scan the QR code on the left side of your screen for a full self-service format in doing so. If you want to talk to one of our senior partners, learn a little bit more about the fund, learn a little bit more about Alumni Ventures, scan that QR code in the top right corner. And if you're already an investor, grateful to have you here, appreciate you being a part of the community, you can reach out to Hillary, Stephanie, or any of your other account managers that you've chatted with. Our fund invests in about 25 to 30 companies a year in these critical domain areas. We hope to have you aboard, and thanks again for being a part of the community and for joining us today.